be presenting the findings and the recommendation of our report. So for our financial analysis report, 7-Eleven versus Alphamart 2022-2024. So our executive summary, the scale versus efficiency paradox. The financial analysis of 7-Eleven and Alphamart for the period 2022 and 2024 reveals two fundamentally different yet successful retail strategies. So for 7-Eleven is the clear leader in scale, growth, and shareholder return, or ROE, operating as a high-volume, capital-intensive business. Conversely, Alphamart is the champion of operating efficiency and profit margin, running a lean mini-mart model that converts sales into profit 4 times more effectively than its competitor. So now for our key financial findings, number 1 is the profitability, profit margin. So our finding is that Alphamart is significantly more profitable on a per sale basis. Alphamart's average profit margin is 16.66%, while 7-Eleven average profit margin is 3.96%. So our interpretation in this is that this disparity suggests Alphamart's mini-mart grocery model, focused on residential areas and lower cost goods, has a superior internal cost structure compared to 7-Eleven's high overhead, high convenience. So now for the number 2, we have here the financial efficiency, ROA and ROE. So for the findings, 7-Eleven exhibits stronger overall financial efficiency, particularly in shareholder returns. So return on equity, 7-Eleven's 41.99% ROE in 2024 is exceptional, dwarfing Alphamart's peak of 13.75%. Return on asset, 7-Eleven consistently maintains a higher ROA, peaking at 8.81% than Alphamart's peaking at 6.75%. So for the interpretation, while Alphamart is better at cost control, high margin, 7-Eleven is much more effective at leveraging its significantly larger asset base and capital structure, including debt, to maximize returns for its owners. So for the third one, we have the revenue trends and growth. So for the findings, both companies are expanding, but 7-Eleven is growing its top line faster. 7-Eleven average revenue growth for 2022 to 2024 is 19.30%, while Alphamart average revenue growth for 2022 to 2024 is 8.85%. So for the interpretation, 7-Eleven's aggressive expansion strategy, driven by its high ROE, is successfully capturing a greater share of the overall market volume. Lastly, we have here financial risk liquidity. So for the findings, 7-Eleven short-term liquidity has tightened, presenting a risk area. So 7-Eleven current ratio for 2024 is 1.01 times, down from 1.29 times in 2023. Alphamart current ratio for 2024 is 1.12 times. And for the interpretation, a current ratio dangerously close to 1.0 times for 7-Eleven in 2024 signals potential short-term liquidity risk, requiring close monitor of working capital management to ensure current liabilities can be met. So now let's focus on the strategic recommendations. So for the company of 7-Eleven, our strategic focus would be margin and risk management, and our actionable recommendation would be optimizing high-cost segments, meaning focus investments on supply chain technology and operational efficiency, especially in prepared foods, to improve the per percent profit margin. Monitor liquidity. Urgent address the tightening current ratio, 1.01 times, to manage short-term financial risk. And for the Alphamart, we have the protect and leverage efficiency, maintain cost control. Do not dilute the industry-leading 17.51% profit margin by shifting heavily into high overload prepared foods offerings. Accelerate profitable growth by using the high internal profitability to fund control organic store network expansion into target residential markets. So now let's jump on the strategic recommendations. So for the company of 7-Eleven, our strategic focus would be margin and risk management. Our actionable recommendations would be optimize high-cost segments, meaning focus investments on supply chain technology and operational efficiency, especially in prepared foods, to improve the per percent profit margin. Next one is to monitor liquidity. urgently address the tightening current ratio 1.01 times to manage short-term financial risk. And for the Alphamart, the recommendation would be protect and leverage efficiency, maintain cost control. So do not dilute the industry-leading 17.51% profit margin by shifting heavily into high overhead prepared food offerings. Accelerate profitable growth. Use the high internal profitability to fund control organic store network expansion into target residential markets. So next recommendation for 7-Eleven is profit quality and financial stability. So shift from aggressive expansions to profit-driven growth. So prioritize same-store profitability over rapid network expansion, focusing on underperforming branches and urban store optimizing to lift the 4% profit margin. For the Alphamart, sustainable efficiency and scalable growth. So enhance product mix profitability, introduce more value-added essentials and exclusive house brands to increase margin without compromising affordability.